What's going on, guys? Bryant here. Today is Monday, May 20th, 2024. Hopefully you had a great weekend. The market is open right now, and I decided to hop on the mic just to record a really quick video regarding a couple positions in which I have open on the SPX. They are both swing trades, and they are both call broken wing butterflies. So continuing along with the video I most recently put out, we're going to take a look at a little bit of some technical analysis regarding why I decided to swing these trades, and then also using gamma exposure as the additional edge that I use to have confidence to actually take the position. As you guys can see right here, this is the Discord on Friday, just a little bit of my thoughts. So I was thinking about grabbing a last minute out the money call butterfly targeting this area. But before we get to the gamma exposure, what actually caught my attention was just basic, simple technical analysis. If we were to maximize the SPX chart on this side here, we can see that when the market has had a nice run up since the FOMC announcement a couple weeks back, and then last week was the CPI report. So we've had momentum. If we just zoom out a little bit, we've had some upwards momentum here. Bulls have, relatively speaking, been in control, and we had a nice simple trend that was easy to establish. It didn't require anything super advanced, and during the afternoon session is generally when most traders like to start shopping around for swing trades. So during power hour, it was easy to take note of the fact that this trend line broke. Now, anything in isolation is not a single reason to take the trade. You want to be able to compound confluences and find multiple reasons to take the trade. The charts, however, allow us to have key levels that we can wait to see what will happen to then determine if we should open up a trade or not. So I was very patient on Friday. However, I did know that I wanted to take a swing trade over the weekend, directional, just because the SPX had hovered around this level for a few days now. So the 5,300 strike, whenever a key strike price like this is touched at least 3 days in a row, I'm generally going to try and look for a directional trade. So this is 1, 2, 3, and it spent majority of Friday around 5,300. So my expectation would be that we're not going to stay around 5,300 for the next trading session. So on Friday, my thought process was, do I think we're going to go up or do I think we're going to go down? So very binary. 325 is the all-time high. So 325 was a strike to be aware of or have some sort of thinking that the market might struggle if we get up to that level. So we have a break of a trend, and that's what caught my interest. I'm not going to fight the trend, because if we're now breaking out, I'm not going to think we're going to go down, especially since there's no real major catalyst on the calendar for today. So the thought process would be that momentum would naturally carry price action up. If you know anything about gamma exposure, we're also in a net positive gamma environment, and there's a lot of positive gamma within this territory. So that's what then sparked my interest to then take a look at what are our key gamma strikes. And we can see 5,300 is very significant. This is where the current price was of the SPX when I took this screenshot. So this is 1 minute after the market closed, and I was targeting the next highest positive gamma strike right here. So this is 53.25, which happened to coincide with the all-time high. I drew this little rectangle around this area because 315 is significant. 315 might end up being the first level of resistance. So if I'm grabbing a swing trade at 300, I'm aware that 315 might be a place in which I'd want to take profit, because the market might struggle here, and then final take profit or the expectation of some sort of consolidation around 325. So these are the three main strike prices I'm aware of: 300, 315, and 325, coming from the gamma profile. This is our positive net GEX. We can see it's green right here. This is our total net GEX, also positive right here for the expiration. I have this open up so we can actually take a look. Now, this was generated just before I started recording this video, so we can see the timestamp right over here. It's the middle of the day as I'm recording this, so 12:10 Eastern time. The SPX is hovering around 321 or so. I believe it's pulling back. So yeah, 317. So it's about 321 just a few minutes ago. And we can see that a lot of the absolute gamma is at 325. We can see that this is still the highest positive gamma strike for today. This expiration is still in a net positive environment. All of this to me just means don't expect the markets to sell off today unless we break below these key strike prices. So if the SPX was to get below 5,300, then I might flip my bias. But as long as we remain above 5,300, then the expectation is we're going to be within this area here with all this positive gamma. With this positive gamma sticking out so much right here, this is the strike price I call as P1. So P1 is just the strike that has the highest positive gamma. My expectation would be that this key strike is where price is going to want to be for today. This graph again is interactive, and this was generated just before I started recording the video. And that's why I just shared this screenshot here on Friday, so you guys can see at that point in time on Friday as the market closed, May 17th, what I was thinking, what I was looking at. Because obviously hindsight is always 20/20, but if you can understand the logic or the thought process behind what another trader might be thinking, especially if they're a little bit more experienced, you can be able to piece together these types of clues for yourself and put together your own type of swing trades or any type of day trades or scalps for that matter. So IV was really low, so this was the trade here, and it's a broken wing butterfly. Now in the previous video I highlighted why I like these broken wing butterflies. This is it here on option strat, and this was interactive, so we can actually take a look at what it looks like. I'll actually show you guys. This is it in Thinkorswim right here. So this is, I have 2 lots right now, so the trade is currently up $400. And if the SPX was to go up about 0.3%, I'd pretty much be at about my break even. And then for the most part, if we pull back about 0.3%, would pretty much be at my break even also. So this is break even at expiration here. That's what this cyan blue level is in the background. And this magenta, pinkish, purplish level is the T+0 line. So this is the current P&L. And this is the current spot price of the SPX. So if the SPX was to push towards this strike price right here, which would be 325, that's the max profit at expiration, which would be a little over 1500. So it's in my best interest right now to have the SPX kind of make another little attempt to go up. I'm using the SPY and the SPX in tandem because this is the way I like to do most of my TA. We can see that this is the SPY intraday VWAP right here. So as long as we're hovering around VWAP, I'm not really too concerned. If VWAP does not hold and then price ends up breaking down below this, I'll likely just lock in my profit instead of waiting until the end of the day to see what's going to happen. Now I like the broken wing butterflies because of the asymmetrical risk to reward, meaning if I was wrong on direction as I opened the trade and the SPX was in this area around here, if the SPX gapped down today and we sold off, I will only lose at most the debit I paid for the trade, which was 80 cents. So having a couple lots, it means the most I could have lost to the downside was $160. Relative to, you guys can already see how much the trade is up. It's up over 200%. So I'm already up over $400 on this trade with the opportunity to make well over 1,000%. So if we were to turn on the profit and loss right here, you guys can see the max profit is 1,000% right here. Now the percentage of my risk, this is how much margin is actually being used to run the trade, because as I highlighted in the previous video, there is risk to the upside if the SPX was to break past the all-time high and keep rallying. My expectations of this happening was very low, but you guys can see the maximum percentage from a margin being used is about 58%, just under 60%. I'm only at risk at a max loss if the SPX was to be up well over 1% on the day. The expectation of that happening, though, was very low because this is where technical analysis comes into play. This is the all-time high. It would be the first retest of the all-time high, so this could potentially be a double top. Who knows? Maybe the market then reverses from here. No one knows, but at the time in which I was thinking, we will come up to this level and then price would either struggle at this strike of 325 or it will consolidate for an hour or two, maybe 3, or maybe all day. Any of those scenarios are very favorable, and if I was wrong and the market just gapped down, I'm only losing 80 cents per lot. On top of that, I had extra confluence of the gamma profile. So the gamma exposure was showing that this is a key level. This is a significant strike price to be aware of. Also, that can likely act as some sort of resistance or consolidation. So being able to compound and layer different confluences definitely will help your trading decisions. And then starting with just taking a look at your chart. There's nothing fancy on this chart here. This is just a simple trend line, and it's not the only reason I'm taking the trade. It's the context of the momentum. It's the context of who is in control of the market. It's the context of the fact that there isn't really any catalyst for the day. No one's expecting any major sell-off for today. A lot of retail traders will speculate, or they'll say like, oh, I'm feeling bearish just because the market keeps going up. But in actuality, the market never really has to go back down. It can go up another 3, 4, 5% from here over the next couple months. And as we are at all-time high, the confidence right now is really in the hands of bulls until there's a break in structure. So until the market closes below a key strike price, let's just say we close below 5,300, that will be a first, warning or first red sign. If there's a huge bearish engulfing on the daily time frame and then the SPX closes below one of these strike prices down here, then that's another strong warning. But as it's going up, there isn't really much reason to be alarmed yet. If we take a look at some additional gamma confluences right here, this would be the SPX now for tomorrow, so the 21st. A lot of positive gamma also. This is from just before I started recording this video, so this is not a screenshot of what it would have looked like on Friday, but it did look similar. It was showing the same thing. As long as we're above 5,300, which was the absolute gamma strike, and we can get past 310, then we're in the land of bulls, as we can say. And then this is a gamma profile combining today's expiration and tomorrow's expiration in the SPY, and we can see the same thing. A lot of positive gamma in this area here, a decent amount of open interest to act as some support. So as long as we're holding above this level, my expectation would be that we're going to stay within this region. Not really much of an expectation for us to break out much higher than this, at least for the next couple days. So being able to compound confluences with some data can help relieve a lot of the subjectivity out of trading, and can also ease some sort of the concerns with if you're wrong. On top of that, being able to manage your risk and being able to have an asymmetrical risk to reward, meaning if I'm wrong on direction, I don't lose that much relative to how much you can make. This can lead to some smart trading decisions. I also decided to run this one for tomorrow expiration. This was a little bit earlier in the day on Friday, just because I was already speculating that the market would continue and have some strength. I wanted a little bit more exposure to a higher strike price in case there was a momentum that would continue. So in case the price action happened like this, where we would break out, consolidate around here all day, I would want a huge win, and then let's just say there is another breakouts and we continue up to here. I wanted the opportunity for another win for tomorrow, and as of now it's looking like that could potentially play out, but no one knows. I'll be more than happy being able to realize most of these gains here today. And if I were to turn off today's expiration and then just turn on tomorrow, you guys can see that how this trade is doing also. So let's just say the SPX was to go all the way up to here. This is the max return on this. I only have one lot of this one right here, as you guys can see. Nothing too crazy, not a lot of risk. In total, my risk to the downside with this trade is $210. And combined, if we add both of the expirations together, total risk to the downside is $350. Theta is also not a concern as long as price is within a certain region, which is to be expected. So I can afford to continue to wait to see what's going to happen with price action. That's the difference, obviously, behind if you just purchase a call. Yes, I could have bought a call on Friday, but if the market gapped down, that call would have been crushed. It probably would have been down about 60 to 70%, which would have likely resulted in a major loss because I would have more than likely realized that trade. Not to mention the fact that it would have been short theta, which meant if the market took forever to then go back up to this area, that trade would have ended up losing money anyway. And that's why I preferred running this broken wing call butterfly, or this combination of two of these butterflies here. Guys, if you enjoyed this video, let me know in the comments down below. Like it, share it if you learned something. The previous video in the description below, as well as my gamma exposure playlist. If this is your first time encountering or learning anything about gamma exposure, the link is in the description to my playlist, in which I've covered a lot of gamma exposure videos. The platform I use for gamma exposure is Quant Trading App. I am the lead developer at Quant Trading App. Also, as a developer, I'm constantly trying to build tools to make it even easier and easier to dissect price action or find key levels. Another example of the 525 level would be, this is an SPX trade engine in which has been under development for a while now, but this is generated every 5 minutes throughout the day here. It's also integrated with the gamma exposure, so we can get a nice live feed as this is constantly updating. If we take a look at price action here, as we jump back to, this is 10:45 Eastern time, and we can see as price was rising, the significance of this 325 level. This is what's referred to as a power strike, so this is proprietary to Quant Trading App. But we can also see that this is the 1 sigma close for today, so 226. So right within this region, we also have the absolute gamma strike of 325, power strike, and we have the 1 sigma close for today. It is also the highest positive gamma strike for today's expiration. And in a snapshot, this is letting us know that this is the highest amount of call volume strike traded for today. So all of these strike prices lining up right within this region. My expectation would be that we would have some sort of a rejection or consolidation in this region. And now we can see this is the most recent snapshot from 12:45 Eastern time here. We can see price ended up rallying, ended up stalling out around here as what would be the expectation. So being able to have extra confluences builds extra confidence. And all of these tools that I'm constantly developing are to help have more confidence with the trades that we take by trying to take as much of the subjectivity out of the trading decision. As these levels are calculated from an algorithm, they're calculated from the options chain, they're calculated from expected moves. which is very important for day traders. And it alleviates a lot of the stress of me trying to guess, hey, what do I think is the key strike, when there are tools that can just let us know what the key strikes are. If you're interested in this, link is also in the description down below to Quant Trading app. Thanks for watching, guys. Have a great week, and I'll catch you in the next one.